Okay, very good morning, dear students. So today we will be continuing with income tax. And of income is income from business or profession, also referred to as profits and gains of business or profession. So, if I'm right, we have covered up to section 43B in the last class. So that was the last section we covered. 43B was in relation to certain payments like statutory payments which can be claimed by an assessee only on actual payment basis. Now, if you recollect our initial discussions regarding income tax, we discussed about two heads of income where basis of accounting is relevant. So, would you be able to tell me what are the two heads of income where the basis or method of accounting is relevant? You know, there are two methods or basis of accounting. One is cash basis of accounting, another is accrual basis of accounting. So for two heads of income, the basis of accounting becomes relevant to determine income. So what are the two heads of income?
Profits or gains from business or profession,
Okay,
and income from other sources.
very good, excellent. So always bear in mind, very important point, that there are two heads of income where basis of accounting is relevant. One is income from business or profession, another is income from other sources. What does it actually mean? It means that whatever may be the manner in which you may maintain books of accounts for financial accounting purpose, that is not relevant first of all. Secondly, for income tax purposes, the basis of charge, what we discussed in each head of income, becomes essential to determine the income. And in respect of income from business or profession or other sources, you have to determine income based on whether you are maintaining books of accounts. And talking about income tax, for purpose of income tax, you are maintaining it on the basis of cash basis or accrual basis. So, interestingly, let us assume that you're going to maintain books of accounts on accrual basis for determination of income. And 43B provides that there are certain statutory payments, like for example, Provident Fund, bonus, commission, statutory dues to financial institutions, banks, etc. If they are not paid during the financial year or rather the previous year or before the due date of filing of return, you cannot claim it as an expenditure. So there are certain expenses which can be claimed only on actual payment basis. So which means that it is a type of a cash basis of accounting. Cash basis of accounting itself means what? You will record a transaction either on actual receipt or on actual payment. So here, 43B, even though you may maintain books of accounts on accrual basis, you have to still claim expenditure only on actual payment basis before the due date of filing of return. So that also means that if you're going to maintain on the cash basis, then there's nothing to worry because anyway you're going to record it only in the year of payment. So kindly make a note what are the different types of payments which can be claimed only on actual payment basis under section 43 capital B. Make a note, section 43 capital B. Amount not deductible in respect of certain unpaid liabilities. That is, certain expenditure can be claimed only on actual payment basis. What are those? One, any sum payable by way of any sum payable by way of tax, duty, cess. Duty, cess. I think in the last class we briefly discussed that, but I want to go into little detail here. So I'll take you, I'll share the PPT with you. You can try to follow that. So this is the one which we are talking about, 43B. Disallowances of certain unpaid statutory liability. One is, as I said, tax, duty, cess or fee under any law. So if you have not paid your sales tax or excise duty, etc., before the due date of filing of return, you cannot claim it as an expenditure. Any tax or any duty or cess or fee for that matter. Similarly, employer's contribution to Provident Fund or superannuation fund or gratuity fund or any other fund for the welfare of employees, you can claim it as an expenditure only on actual payment basis. So you normally contribute as an employer towards PF, superannuation fund, etc. that can be claimed only on actual payment basis. Third is bonus or commission for services rendered or payable to the employees, normally referred to above, and some due in lieu of leave balance, that is leave salary. recollect our initial discussions in salary topic, you will be able to recollect what we discussed regarding leave salary. So if an employer has not paid the leave salary before the due date of filing of return, he cannot claim it as an expenditure. But don't forget the fact that this expenditure can be claimed in the year of actual payment. In the year of actual payment. Similarly, interest on any loan or borrowings from any public financial institutions or a state financial corporation or a state industrial investment corporation in accordance with terms and conditions of loan or borrowing. So if an assessee has borrowed any loan from bank or public financial institutions or state financial corporation, you have to necessarily pay the interest on it, and the interest whatever has been actually paid only can be claimed as an expenditure. And if interest is due, you cannot claim it as an expenditure. You can claim it as an expenditure in the year of payment. So always remember, all these expenses are not disallowed, but you cannot claim it unless you are paying it. That's the point. So whenever you actually pay, you will be able to claim the expenditure, that is in the year of payment. Interest on any loan, term loan particularly, from a scheduled bank in accordance with the terms and conditions of the agreement governing the term loan. And it should be noted that these payments will not be allowed as reduction on accrual basis if not paid by the due date of filing of return. So similarly, there is one more point here. Any sum payable to railway authorities. Any sum payable to railway authorities for use of railway assets. So if at all you are going to take on rental any railway assets, from nowadays you know that railways is offering lot of facilities for commercial purposes, where let us say there is a railway station where you have taken a small property on that on rental basis for running a shop, and you have to pay the shop rental. Unless you pay the shop rental to railways, you cannot claim it as an expenditure. You can claim in the year of payment. So all these expenses can be claimed only in the year of payment, or at least you should have made the payment before the due date of filing of return. Otherwise, you are not eligible to claim in the previous year. But you can necessarily or definitely you can claim it in the year of payment. All of you are clear? Any doubt? 43B is an important section, very important section, because see, typically in an exam, when they're going to ask you a question to solve, problem to solve, there are few provisions which will necessarily come, or normally they will come. One among the provision is 43B. You go and check any past question paper, you will observe that one point is definitely on 43B, which means this section is very, very important. And since most of the time they ask questions from this section, you need to be well prepared in this. What are all the payments that can be claimed only on actual payment basis? Understood? Any doubt in this section 43B? All of you are clear?
Yes, sir.
Okay, shall we move on? So we are now almost completed all the disallowances. So we have actually bifurcated this topic broadly into three categories, I said. One is about expenses allowed, section 30 to 37. Then we are discussing about expenses which are not allowed, 40 onwards. Okay. Now we are going to move on to another important third part of this particular chapter, wherein we are going to discuss about the provisions of the Income Tax Act regarding maintaining books of accounts. Who should maintain books of accounts? What are all the books of accounts to be maintained? And we are also going to cover an important aspect regarding tax audit and presumptive taxation. Now let me briefly tell you what it is all about. Now when we are going to earn income, particularly when you are talking about an assessee carrying on a business or profession, it is necessary to maintain certain books of accounts in order to determine the income. Unless you maintain proper books of accounts, you will not be able to determine the income correctly. Now, is it compulsory that everybody should maintain books of accounts? Let us say Mr. X, his annual income is 1 lakh. He's running a small business. Now, does he need to maintain books of accounts? That's a basic question. Now, we are going to go by turnover criteria. We are going to go by the turnover criteria. What is his turnover? X amount. Let us assume, for sake of example, Mr. X is running a business. His turnover is 1 lakh. And is he required to maintain books of accounts? Now, there are two things here. One is referred to as a business, another is a profession. So, professionals like company secretaries, chartered accountants, cost accountants, architects, there are many people. They earn some income by offering their services, right? So, turnover becomes a criteria in order to determine whether at all they should maintain books of accounts. So, whenever we talk of chartered accountants, cost accountants, company secretaries, etc., they are all referred to as specific professionals. They should maintain books of accounts. and there are other professionals who need not maintain books of accounts. So we are going to now understand what is the turnover criteria. Who should maintain books of accounts? Who need not maintain books of accounts? And if someone is required to maintain books of accounts, what are all the books of accounts is supposed to maintain? For example, as a professional, if my turnover crosses a particular limit, I need to maintain books of accounts. A specified professional. Whereas an unspecified professional may not require to be maintained, he need not maintain any books of accounts. So that is the important provision under 44AA. So 44AA of the Income Tax Act provides who should maintain books of accounts, what is the threshold limit for maintaining books of accounts, who need not maintain books of accounts, and what are the books of accounts to be maintained. So we'll cover that first, and then we will move on to tax audit aspect. Okay, clear? So let me again take you through the presentation here. Who are all supposed to maintain books of accounts? Now look at this carefully. I hope you are able to see the screen. Is the screen visible?
Yes, sir.
Yes.
Yeah. So now when we talk about books of accounts to be maintained, remember this section 44AA and Rule 6F. So income tax has specified certain books of accounts that are required to be maintained for the purpose of determination of income. And what are those is prescribed under Rule 6F. Now, who should maintain books of accounts? Books of accounts and accounting records have to be maintained if the gross receipts or turnover more than 1,50,000 in the 3 preceding years for an existing professional. And this also applies to a newly set up professional whose gross receipts are expected to be more than 1,50,000. Now, very important, if the gross receipts are more than 1,50,000 each of the 3 preceding years, and the accounting records are being maintained as prescribed under Rule 6F. Who are all the professionals who are supposed? So, for example, I told you Mr. X is a professional and his gross receipts in the 3 years is not even in 1 year has crossed 1,50,000. Each year it is only 1 lakh. So, he may not be required to maintain books of accounts. So, books of accounts are required to be maintained only if the gross receipts are more than 1,50,000 in 3 preceding years. That is, if he is already an existing professional, for the last 3 years, you have to determine what is his income, gross receipts, turnover. And if it is crossing 1,50,000, then only he is supposed to maintain books of accounts. Otherwise, he may not be required to maintain books of accounts. But having said that, you need to have relevant records to enable the assessing officer to determine income if required. So I'll come to that later. What are all the accounting records to be maintained also, I'll now tell you. But before that, who are all the professionals who are required to maintain books of accounts? Legal professionals. So legal professionals are required to maintain books of accounts. Medical professionals like doctors, engineers, architectural service providers, accounting, chartered accountants, etc., accounting professionals, technical consultants, interior decorators, authorized representatives. That is a person who is authorized to represent another person for a fee before a tribunal or any authority constituted under any law, and it does not include an employee of a person, so represented or a person who is carrying on the profession of accountancy. This is other than chartered accountants, for example. Other than chartered accountants, let us say you are going to engage an authorized representative to represent you in a case before tribunal, etc. And he is referred to as a professional who is supposed to maintain books of accounts if the gross receipts exceeds 1,50,000. Film artist. I think film artist, they are the people who earn. Normally, you know who are all referred to as a film artist. This includes a producer. So we need not just assume it's an actor only. It covers more than an actor. Producer, editor, actor, director, music director, art director, dance director, cameraman, singer, lyricist, story writers, screenplay or dialogue writers, and costume designers. So if they are going to be engaged in film industry in any of this form, then they have to maintain books of accounts if the gross receipts exceed 1,50,000 in the last 3 years. And if it is expected to cross 1,50,000 in the first year of operation itself, then they should maintain books of accounts. They can make an estimate of their income and they should maintain books of accounts. And a company secretary has to maintain books of accounts. And if anyone is a freelancer pursuing any of these above professions and gross receipts are likely to cross 1,50,000, then the rules will apply. So what is the point here? These are all, as I said, referred to as specified professionals who are required to maintain books of accounts. And what are all the books of accounts? I'll come to that. So if the gross receipts of the professionals whom we are referring to here are not more than 1,50,000 in any one or more of the preceding 3 years for an existing professional or for a newly set up profession whose gross receipts are not expected to be more than 1,50,000. Very important point. So what is the point of difference here? If for all the 3 years, if it crosses 1,50,000, he has to necessarily maintain books of accounts. For the past 3 years, for example, I am a professional. For the last 3 years, my turnover has crossed 1,50,000. Now it's compulsory for me to maintain books of accounts. But having said that, if my turnover in any of the last 3 years is not crossed 1,50,000 in any of the 3 years, very important point, then I only need to maintain certain books of accounts which will enable the assessing officer to determine my income. So what does it mean? What is the difference between crossing 1,50,000 and not crossing 1,50,000? When I say it's crossing 1,50,000, it is compulsory to maintain books of accounts. If it is not going to cross 1,50,000 in any of the 3 previous years, then I am not required to maintain books of accounts, but necessarily I should have certain records with me which will enable the assessing officer to determine my income, Are you able to follow the difference between the two? Clear? So this is an important threshold limit, and any business, I'll come to that. If a person is going to carry on a business, what is the threshold limit? I'll come to that part. But have you understood this aspect of who should maintain books of accounts with regard to profession? Any doubt about this? With regard to persons carrying on a profession, which I refer to as specified profession, I hope you are now aware who should maintain books of accounts and what are the books of accounts. I'll come to that a little later now. So, chartered
preceding
accountants.
3 years வந்து
Sorry?
Sir, preceding 3 years வந்து இப்போ 1.5 lakh cross ஆகுது. But 4th year, 5th year வந்து if it is reduced to now,
you should continue to maintain.
Okay.
You should continue to maintain because a very interesting question you asked. The criteria is, as you said, the criteria is only for the past 3 years. Very interesting point. These are all the things which definitely you will have as a doubt. No, so the reference point is the past 3 years. So interestingly, they are not referring to the future. That means it is interpreted as for the future, you should continue to maintain books of accounts. Yeah. So
okay, sir.
once you start, then you should continue to maintain books of accounts. You are compulsorily required to maintain books of accounts means, otherwise what would happen is, for example, last 3 years it was 1,50,000, 4th year is 1 lakh, 5th year is 50,000, 6th year is again 2 lakhs. So it becomes difficult to establish a pattern there. So the law is very clearly interpreted as you should continue to maintain your books of accounts. Now, the books of accounts are required to be maintained in order to determine the income correctly. That's the point here. So what are the books of accounts which will enable the assessing officer? So you have to maintain books of accounts like cash book, journal, ledger, records, stock records, etc. That is okay. But beyond that, the assessing officer will call for it. In order to complete the assessment procedure, the assessing officer can call for these records. So bring your cash book, bring your bank book, bring your bank statement, bring your stock records, bring your asset details. So the assessing officer will have a right to seek records. So you need to maintain these records properly. Very, very important. So threshold limit is very low, 1,50,000 turnover in a year. So that means ultimately everybody will be falling into this requirement of compulsory maintenance of books of accounts. But even otherwise, that's a catch here. Even if you're not compulsory required to maintain books of accounts as prescribed under Rule 6F, you are supposed to maintain certain records which will enable the assessing officer to determine your income. That means necessarily you have to maintain something like cash book, passbook, bank book, whatever, because otherwise you can't even determine the income. So which eventually means that broadly all specified professionals have to necessarily maintain books of accounts in a way or other. All of you are clear?
Yes, sir.
Now coming to business, if the turnover, kindly make a note in respect of person carrying on non-specified profession other than those what we discussed, or business, if annual income does not exceed, income means profit, if annual income does not exceed 1,20,000 and annual turnover does not exceed 10 lakhs. I hope I have given here. I'll Okay, anyhow, this is the point. So carefully observe this point. If in case of a non-specified professional, that is other than those what we discussed, or a person who is carrying on a business, then where the income does not exceed 1,20,000 in a year, income means profit, or the turnover or gross receipts does not exceed 10 lakhs in all the preceding 3 years. In all the preceding 3 years, that means Mr. X is running a business, and for the last 3 years, his turnover is 7 lakh, 8 lakhs, 9 lakhs. Then he need not maintain any books of accounts. And there are two criteria here, where the income does not exceed or profit does not exceed 1,20,000, or it's or. Very, very important, dear students. When we read it as a theory, it looks very simple, but we need to carefully observe the points here, because if it's going to be a question in an exam, then only you'll have a doubt. So we need to be very clear. Where the income does not exceed 1,20,000, that is, the profit does not cross 1,20,000, or not and, or total sales or turnover or gross receipts are not more than 10 lakh in all the preceding 3 years. So, Mr. X is running a business for the last 3 years. His turnover is 8 lakhs, 7 lakhs, 9 lakhs, whatever. And his income also does not exceed 1,20,000. Either or. Then no books of accounts are required to be maintained. And in case of a newly set up profession or business, the same rule will apply. When income is expected to be less than 1,20,000 or turnover is expected to be less than 10 lakhs. So that automatically means that where the income is going to be more than 1,20,000 or turnover is going to cross 10 lakh in all the 3 preceding years. So Mr. X is running a business for the last 3 years. His turnover is 11 lakh, 12 lakh, 15 lakhs, and his income is exceeding 1,20,000. Then necessarily he has to maintain books of accounts and other documents which will enable the assessing officer to calculate their income under the Income Tax Act. So are you able to understand the threshold limit here? Who should maintain books of accounts? And so here, interestingly, he should maintain relevant books of accounts and no specific records are prescribed. And in case of a newly set up professional business, the same rule will apply when income is expected to be more than 1,20,000 or the turnover is expected to be more than 10 lakhs. So that's a point here. So when we talk of two things, carefully observe, dear students, or rather I will categorize into 3. One is specified profession, other is non-specified profession. Of course, that 2 means you can club non-specified profession and business. Specified professionals, we discuss about the threshold limit where they are required to maintain books of accounts as prescribed under 6A, Rule 6A. With respect to non-specified professionals and business people whose criteria of turnover threshold limit is crossed, they have to maintain necessary books of accounts which will enable the assessing officer to determine the income. And interestingly, books of accounts are not prescribed, but generally in a business, you have to maintain cash book, journal, ledger, all that. That is a very interesting difference between specified profession, maintaining books of accounts, and non-specified professional and business people. Very important section. And because income itself is determined based on books of accounts maintained, it becomes essential to maintain proper books of account. Otherwise, it will be very difficult to determine the income, and the assessing officer can make a best judgment assessment. We'll come to that later in the assessment procedure. A best judgment assessment is an assessment which is done by the assessing officer based on records available. So he will on his own determine the income because you don't have proper books of accounts or you are not able to share proper books of accounts. So based on the available records, nowadays income tax, they have records better than you. My income, I try to find out from income tax records. Because your income is tracked based on your PAN number. Every single transaction of yours is tracked by a PAN number. We'll be discussing a little later. There are certain requirements under the Act wherein certain institutions like banks, financial institutions, insurance companies, mutual fund companies, they have to report to the income tax authorities on a periodic basis. That's referred to as a return. Typically, like a quarterly or an annual return, they have to submit to income tax authorities, wherein every information of yours will be given to the income tax authorities. Now, particularly with reference to threshold limit, if it crosses a threshold limit, it will be given to income tax authorities. What I need to say here is whether you maintain books of accounts or not is one. That is compulsory. There is a penalty for non-maintenance of books of accounts, etc. That is one part of the act. The other part of the story is that the income tax authorities will have relevant information about you based on your PAN number, and you have GST. Everything is now interlinked. So there is no way you can sort of tell I don't have anything, because income tax authorities may have their own records to determine your income broadly, and they will levy tax on that. So it is better for us to maintain books of accounts so that at least we can arrive at exact income and all that and show it to the income tax authority. So it has become sort of compulsory now, technically speaking, to maintain proper books of accounts. Otherwise, it becomes a little cumbersome. So I don't expect any businessman or professional to run a business without even having proper books of accounts, unless they're unorganized sector. So unorganized sector people, they don't maintain. Ideally, as I said, if you have a phone number and Aadhaar card and PAN number, then you are done. Your history. In Hindi, they call it as Jantri. Anyone has heard of this word called Jantri? Jantri means any idea what it is? Jantri means your horoscope. Jadagam so. Jadagam mein department relevant. So there is nothing you can do without income tax department knowing about it. ஏன்னா 10 ரூபாய்க்கு சாக்லேட் எல்லாம் வாங்கி சாப்பிடலாம், இன்கம் டாக்ஸ் டிபார்ட்மெண்ட் தெரியாது. ஏன்னா பேன் நம்பர் கொடுக்க மாட்டோம், நம்ம எதுவும் கொடுக்க மாட்டோம். Otherwise, every single financial transaction of yours is known to department. Okay, so the point is like it becomes necessary to maintain books of accounts. As simple as that. Okay, though you can do a fine balancing act based on turnover and all that, but still practically becomes relevant for maintaining books of accounts. Clear? Any doubt at this stage? So what are the books of accounts to be maintained? So here, look at this carefully. What are the books of accounts under Rule 6F? Records. Cash book. Necessarily, you should maintain a cash book. You know what is a cash book? Which records day-to-day cash receipts and payments, and also provides you the cash balance at the end of the day or at the end of each month or any period for that matter. Journal. You need to maintain relevant journals according to the mercantile system of accounting. A journal is a log of all day transactions, whatever day-to-day transaction happens, and it's a record in accounting terms where total credits equal total debits. And when we follow the double entry system of accounting, for each debit there is a corresponding credit and vice versa. So you need to maintain a cash book, you need to maintain a journal and a ledger where all the entries are posted into the ledger from the journal, and you have ledger balances, which is required to prepare a trial balance and correction. And photocopies bill receipts issued by you which are more than 25 rupees, and original bills of expenditure incurred by you which are more than 50. Look at the limits here. So if it is a receipt issued by you for more than 25, you should maintain a record. If it is original expenditure, original bill crossing 50 rupees. And what are the additional requirements for a doctor who is carrying on a medical profession, like doctors, surgeons, dentists, pathologists, radiologists, etc. Daily cash register with details of patients, services rendered, fees received, and date of receipt. So if you are going to have, you are a doctor, ensure that you maintain these additional registers and records, details of stock of drugs, medicines, and other consumables used, and each year books of accounts must be kept as a record for at least 6 years from the end of that year. So all your records required under 6F is required to be maintained for at least a term of 6 years for future reference, for any future reference. Okay, now coming to another interesting part, I am going to briefly tell you something called, before I get into tax audit, I am going to tell you something called presumptive tax. Now, this is an interesting development in the last few years. Presumptive tax. Have you heard of presumptive tax? Idea what is a presumptive tax concept? Presumptive tax is a newly introduced section which provides for tax payable on the basis of one minute. Okay. So presumptive tax is nothing but tax is computed on the basis of a presumption. What is this all about? I'll give an example. Now I am a professional carrying on a profession, and I don't want to maintain books of accounts because it is a bothering problem. Because maintaining books of accounts is one of the challenges you need to face, and maintaining books of accounts means I need to track it every day, I need to engage people, I need to employ accountants and all that. So I want to avoid that. If I want to avoid that, then I have a choice. What is the choice I've got? I can pay tax on my income on a presumption. That is, for example, I tell you, as a professional, under the provisions of the Act, I am a practicing professional. Under the provisions of the Act, I will be eligible to pay tax on a presumptive basis. Let us say my turnover is 40 lakhs. Let us say my annual turnover is 40 lakhs. On this 40 lakhs, I need to calculate an income which is at 50%, flat 50%, 50, of my turnover or gross receipts. What does it mean? My profit or income from profession is a flat 50% of 40 lakhs, which is 20 lakhs. And that is my income from profession. What does it also means? It means that when I'm going to pay tax on a presumptive basis as 50% of my turnover without actually determining my income, probably because I don't have books of accounts or whatever it is, I need to necessarily fix it at 50% of 40 lakhs, which is 20 lakh rupees, and that is my income from profession. I cannot claim my actual expenses, whatever it might be. So in this case, I may not be required to maintain any books of accounts. Are you able to follow me or not? So there are 2 to 3 scenarios we are going to discuss where we can apply the provisions of the Act regarding presumptive taxation. The other one is about, for example, I'm running a business. And if I'm running a business, I also have a choice of not maintaining proper books of accounts and pay or arrive at an income which is a fixed percentage of my turnover. For example, I'll tell you, if my turnover is 50 lakh rupees and I assume, for example, 8% of that is my income, or as per the provisions of the Act, we are going to discuss that now as to what is the exact percentage. Because this is something which normally undergoes a change. So our updated assessment here, 22-23. So we need to understand that. Are you able to follow what I'm saying? So in case I'm going to operate a business, I'm going to determine my income as a fixed percentage of my turnover, which is 8% or 6% or 5% as prescribed under the Act and rules. Whereas if I'm going to run my own profession, 50% of my total turnover is my income. And similarly, there is another section which provides for determination of income under presumptive taxation where I am a truck operator. If I am a truck operator, I am covered. I have a choice. Now remember, this is an option available. This is not compulsory. Now, what does it mean? If I don't want to pay tax on a presumptive basis, then I need to maintain proper books of accounts in order to determine my income correctly. Now, I told you as a professional, my turnover is 40 lakhs, on that 50% is 20 lakhs. Now, actually, if I claim all my actual expenses, my income is only 10 lakhs. Then why should I declare my income as 20 lakhs when I have a choice to declare my income as 10 lakhs based on my actual records? I am eligible to do that, but there is a condition. I need to maintain proper books of accounts. I need to get my accounts audited by a chartered accountant. That is, any professional has to get his books of account audited. So there are interlinkages here. If I don't want to go by presumptive tax, then necessarily I need to pay tax on actual basis and I need to maintain proper books of accounts because that is what is going to establish my actual income. And not only that, I am subject to tax audit. because my books of accounts have to be audited in order to ensure that my income is correct. Are you able to understand what I'm saying?
Yes, sir.
To discuss the provisions in detail, and these are all very important sections here, students. 44AA, who should maintain books of accounts? Coming to 44AB, tax audit. Then we are going to discuss later about presumptive taxation. So, three important areas for question on this. Doubts at this stage? I'll just brief you. I'll take you through the provisions now. If you have any doubts at this stage, please let me know. Shall we proceed? Yeah.
Yes, sir.
So let us look at this. Very important provision of the Act for professions and businesses covered under 44 AD, 44 AE. Businesses covered under 44 AD and AE are not required to maintain any books of accounts. Because I'm going to pay tax on a presumptive basis. Because I'm going to pay tax on a presumptive basis. All of you clear? Now, a taxpayer who wants to claim their income from business, which is lower than presumptive tax under 44 AD or 44 AE, then he has to maintain books of accounts and get them audited under 44 AD. So there are two requirements which comes up if you want to pay tax on actual income basis. One is not only that you should maintain books of accounts, but you should also get the books of accounts audited by a chartered accountant under 44 AD. And a taxpayer may shift from presumptive taxation to normal taxation to claim income from business or profession if it's lower than the presumed income. But you have to get your books audited. And in such a case where the income exceeds the basic exemption limit of 2,50,000, books of accounts are required to be maintained and audited under 44 AB. Both becomes compulsory. So now as a professional, if I don't want to have the hassle of maintaining books of accounts and don't want to get my books of accounts audited, then I have to opt for this presumptive taxation route. Presumptive taxation route is very convenient, no doubt, but depends on the income levels. If your income level is very high and income means the profit level is very high, then you can go for presumptive taxation. But what I mean to say is that you have to go by actuals because probably you want to determine your actual income. But depending on the nature of your business or profession, you can decide whether to go for presumptive taxation or not. But you opt for a presumptive taxation, you have to pay a flat. You have to determine income on a flat 50% basis as a profession or 8%, for example, for a business. Clear? Any doubts? Kindly make a note. Very important. Very important. 44 AB governing tax audit. Governing tax audit. Who are all required to get tax audit? Then will come to presumptive tax. Who are all required to get their books audited? One, a person is carrying on a business. Very important, make a note. Tax audit 44 AB. If a person is carrying on a business and the total turnover exceeds 1 crore. Exceeds 1 crore. And for assessees opting for presumptive tax under 44 AD, if the turnover crosses 2 crores. I'll repeat, if a person is carrying on any business, if his annual turnover crosses 1 crore, it's compulsory to get tax audit done. But for assessees who are opting for presumptive tax, very important, if the turnover crosses 2 crores, then again he has to get books of accounts audited by chartered accountant referred to as tax audit. So I am a person who is opting for presumptive tax. As a business person carrying on a business, I am opting for a presumptive tax. It's okay, no problem. But my turnover is crossing 2 crores. Then automatically I'll also be governed by tax audit. If I'm governed by tax audit, that means I have to maintain books of accounts. So the threshold limit for 44 AD, where a person can opt for a presumptive tax without a tax audit, is up to 2 crores. I hope you're able to understand. So this will enable a lot of small to medium players. I'm talking about annual turnover. So this will enable small to medium players to opt for a presumptive tax if the turnover is up to 1 crore or 2 crores, so that he may not have the hassle of maintaining books of accounts, or he may not be required to get his books of account audited. Then the second category is, if a person is carrying on a business and the following conditions are satisfied, then tax audit is required only if the turnover crosses 10 crores. Very important recent amendments, kindly make a note. If a person is carrying on a business and if he fulfills certain conditions, tax audit would be required only when the turnover crosses 10 crores, or the business crosses 10 crores. What are the two conditions? The aggregate of cash receipts or sum total of all the cash receipts in business does not exceed 5%. So now everything is digital, you know that. In fact, digital currency is also coming up, etc. So cash is something which you may not see in the near future, at least for some time down the line. You will have to hunt for where is cash. Cash may not be available at all. Physical cash, what I'm talking about. Digital currency, online payments, digitization, everything is order of the day. So everything goes online. Everything is tracked. So there's no question of cash. So cash economy, slowly you will observe, it's going to go down. So if you're going to carry on a business and if your turnover crosses 10 crores only, you'll be subject to tax audit, provided, condition number 1, that the cash receipts from the business does not exceed 5%. And payments, whatever you made in the business, does not cross 5% in cash. And everything should be made by way of account pay, check or draft. If at all it's made by check or draft, it is to be made. Payments has to be made by check or draft, receipts by account pay, check or account pay drafts. So in this case, the turnover criteria is fixed at 10 crores. I am a business person. I am carrying on a business. My turnover is 9 crores and I am fulfilling these two conditions. Then I am not coming under the ambit of tax audit. My books of accounts need not get audited. Third category, a person who is carrying on a profession where the turnover crosses 50 lakhs in a year, in the previous year, he has to get its books of accounts audited compulsory. I am a professional, my turnover is above 50 lakhs, tax audit is compulsory. When I say tax audit is compulsory, necessarily books of accounts to be maintained, there is no other choice. Without proper books of accounts, nobody can carry out a tax audit. Then with respect to person covered under presumptive tax, and if he wants to declare an income lower than the presumptive tax, then he has to get his books of accounts audited. Now, this is the point I said. If my turnover is, let us say, 40 lakhs as a profession, I am not required to get tax audit done. Fine. I am opting for presumptive tax, let us say. Now, if I am opting for a presumptive tax, I am going to declare 50% of my income of 40 lakhs, which is 20 lakhs. Then no problem. I'll determine my income as 20 lakhs and file my return. But if I want to determine my income less than 20 lakhs, as I said, my actual income or profit is only 10 lakhs, then I need to get my tax audit done. That is, my books of accounts have to be audited by a chartered accountant. So those who are opting for presumptive tax and pay tax as per presumptive tax rates, no issues, no tax audit. If not, then you will necessarily get covered under tax audit. And for a person carrying on a business, very important, and its income exceeds the maximum amount not chargeable to tax, covered under 44 AD subsection 4, then he has to get his books of accounts audited. A person carrying on a business governed by provisions of section 4484, and income exceeds the maximum limit which is not chargeable to tax, to get its books of accounts audited, tax audit. And the last category, if a person claims that income is less than the presumptive tax income under 4480A, and his income crosses the limit prescribed, which is not chargeable to tax. I'll come to this in detail, because what we are referring to here is only who are all supposed to get their books of accounts audited. But we are ready to cover in detail the provisions of presumptive taxation. So I'll come to that. So a person who is covered under 4480A, and if he wants to declare an income lower than the presumptive tax income, and if the income exceeds the threshold limit of maximum amount not chargeable to tax. For example, no, 2,50,000 and above, a proprietor is carrying on a business, his tax limit is up to 2,50,000, no tax, for example. So if it crosses that, then he has to get his books of accounts audited. So as I said, somebody carrying on a business and he wants to declare an income which is lower than the presumptive tax, as I already said, then necessarily he has to get his books of accounts audited if it crosses the threshold limit of exempted income. Up to 2,50,000, it is exempted for a proprietor. So you need to keep this in mind. So very important, section 44AB, who are all required to get books of accounts audited, tax audit. Any doubt in this?
No, sir.
To look at the provisions of the Act, as I said, this last set of provisions, what we are discussing, with respect to income from business or profession, is very, very, very important. Very important from a practical perspective. Okay, from exam point of view, I said it's yes important and all that. But from a practical perspective, these provisions are very important and relevant, because as professionals, we need to understand who should maintain books of accounts, who need not maintain books of accounts, who is specific professional, who is not a specific professional, what are the books of accounts to be maintained, and when tax audit is compulsory, when tax audit is not compulsory, and what are the provisions regarding presumptive tax, because there are a lot of interlinkages between these sections. There are a lot of interlinkages between these sections. So consequently, it is important for us to have a proper understanding of these provisions, and these provisions are subject to change almost on a year-on-year basis. The limits, what we are talking about. So that is why you need to refer to the latest study material, or you have to have a latest book covering previous year 21-22, assessment year 22-23. Because every such threshold limits, what we are discussing here, undergoes a change because of various developments happening on a regular basis. So government is pushing the digital economy concept, and consequently all these have got implications here. So the income limits are all prescribed based on that. This 5% payment in cash, 5% receipt in cash are all newly introduced. So have a proper understanding of it, because very, very important. So don't mix up with some old numbers. Old numbers are not going to help you. So study material, if you have old material, just ignore this and refer to the new study material. You can very well refer to the institute study material. You can download that. Latest study material will be available in the institute website. If not, you can refer to any book which carries latest provisions. All of you are clear? Now we will move on to presumptive tax. Now there are three broad sections I told you. One is about presumptive tax for a person carrying on a business. One is presumptive tax for a person carrying on a profession. Another is presumptive tax for those persons who are carrying on a business of operating trucks, truck operators. Based on the number of trucks and whatever, they fix an amount, and that is the basis on which you have to determine your income. So let us first take up section 4480. Kindly make a note. Section 4480. Presumptive tax relating to computation of income of a person carrying on. It's applicable to individual, HUF, a partnership firm, not an LLP. Not an LLP. So this is in regard to a person carrying on a business. 4480 is with regard to a person carrying on a business, and he can be a proprietor, he can be a traditional firm, an individual. Okay, and the turnover criteria fixed here is any business, and we are going to cover something called a negative list. Negative list means this particular section on presumptive tax does not apply to certain types of businesses. But for other types of businesses, you can apply this section of presumptive tax. As I said, presumptive tax is brought in primarily to facilitate the taxpayers who doesn't want to have the hassle of maintaining books of accounts or get their books of accounts audited. Because these are all complaints and there are a lot of costs associated with complaints also. Particularly, this will be more relevant for small to medium players. Anyhow, the turnover criteria is also fixed accordingly. Turnover criteria is also fixed accordingly. Okay, so 4480, if a person is carrying on a business, he can be an individual, partnership firm, not LLP, etc. or HUF, then he can opt for this section. The turnover criteria for the business is up to 2 crores. 2 crores. If it crosses 2 crores, tax audit is compulsory. You all know that, we discussed that. And in such a case, if income is computed based on presumptive tax, it is 8% of your income. 8% of your comprehensive income. No deductions will be allowed. No deductions will be allowed. So I'll repeat, if an income is estimated on presumptive taxation basis, that income is determined at 8% of your turnover, and the rate of 8% is comprehensive rate, and no further deductions are allowed under any other section. And even reduction of remuneration and interest to partner is not available. So if you are going to operate a traditional partnership firm, you are eligible to claim expenditure in the form of what? Interest on capital to partners, etc., which is normally allowed. But if you are opting for a presumptive tax and if you are operating a partnership firm, you are not eligible to claim this. You are not eligible to claim the deduction. So you have to apply a flat 8% on your turnover. So my turnover as a businessman is 80 lakhs. 8% of 80 lakhs is 6,40,000. That's my income. Okay, from business. Now another point is an assessee who is opting for presumptive tax under 4480 can avail the following benefits. Can submit return of income under ITR 4, which is a simplified return of income. So we are going to come to the forms of return later, but for the limited purpose of this discussion, kindly make a note. A person who is governed under presumptive tax or who is opting for a presumptive tax can file return under form number ITR 4. And he is exempted from maintaining books of accounts. Very, very important point. A person who is opting for presumptive tax is exempted from maintaining books of accounts. Maintaining books of accounts. Then he can pay advance tax in one installment. Need not pay in multiple installments. Normally, for any assessee, advance tax is payable almost on a quarterly basis. September, December, March, July, September, December, March, corporate, non-corporate. It depends on whether it's a corporate assessee or a non-corporate assessee. Corporate assessee means July, September in October. So he has to pay advance tax every quarter. But for assessees who are opting for 4480, he need not pay advance tax every quarter. He can pay at the last quarter, March 15th. So before March, he can pay the taxes. So one-time advance payment. That's all. Very, very advantageous position here. So for small to medium player, he doesn't need to have the hassle of paying quarterly advance tax. He need to pay tax only at the end of the year. So the advantage is he has to pay advance tax pertaining to this business in one installment on or before 15th March. So determine your income, pay advance tax before 15th March, one time. And Other assessees are normally required to pay, as I said, in every quarter. So you also avoid that. Do you think these are all advantages for small to medium players? Otherwise, as I said, there are quite a few things you need to do. Maintaining records, getting books of accounts audited, everything has to be done by you. You have to pay advance tax. So there are multiple compliance requirements for those assessees who don't want to opt for presumptive tax. I think it's fair to assume 8% of your turnover as your income, if at all you want to choose the presumptive tax. But the point, as I said, depends on the nature of business, and maybe your actual income is much lower, or you may be having a loss also. You want to declare income much lower than 8%. Now remember that, yeah, this is another interesting point. Let us say, actually a business has suffered a loss. Actually a business has suffered a loss. If you're opting for presumptive tax, then what you should do? You should still pay 8% of your turnover. Tax on, now remember, you have to be very careful here. Your income is 8% of turnover, not tax. Your income is 8% of turnover. So you're running a business, you have got a turnover of 40 lakhs, your income is 8% of 40 lakhs, which is 3,20,000. And 3,20,000 with other heads of income, you add up and pay tax finally, based on tax slabs, if you are an individual. So I am running a profession. I have other income. My professional income is, let us say, 10 lakhs. I need to assume 50% of my professional income. Because for business only it is 8%, for business profession it's 50%, presumptive tax. So my total income is, profit or income is same. Okay, my turnover is 20 lakhs. My turnover is 20 lakhs as a professional, and 50% of my 20 lakhs is 10 lakhs. That is my profit or income. And I need to add that along with other heads of income, and finally arrive at gross total income, less deductions, net income or taxable income. Then I need to calculate tax on that. Are you able to understand? Let me repeat. When I am going to opt for a presumptive tax for the purpose of my profession, I need to assume out of my turnover, 50% is my income or profit from business or profession. In my case, it's profession. So when I'm going to determine my gross total income, I may have house property income, I may have interest income, other sources, etc. I add up all the heads of income and I'll finally arrive at a gross total income. I am eligible to claim deductions under section 80C to 80U. And after that, finally, I determine my tax. Able to understand the structure? Any doubt in this?
Yes, sir.
Okay. So moving on, 44AD, I said the following persons cannot opt for 44AD, negative list. Even though I am carrying on a business, the following businesses I am not eligible to opt for this section for 44AD presumptive tax. What does it automatically mean? That means I have to necessarily maintain books of accounts. I need to get tax audit done if it crosses the threshold limit for my business. One, a person carrying on a profession cannot claim under this section. He has got a separate section. Okay, 44AD is only for business. Secondly, a person carrying on or income earning in the nature of commission or brokerage. The person is earning income in the form of commission or brokerage. He cannot opt for this. His activity is a business activity, but the earnings are all in the form of commission and brokerage. Let us say Mr. X is running a real estate business. His job itself is something to do with buying and selling real estate property or whatever it is, or whatever of such a nature. He's only earning commission and brokerage. So he is not governed under this section. That means he has to maintain books of accounts, file returns, records, everything has to be done on the normal basis. If at all tax audit is coming in the limit, you have to do. But maintenance of books of accounts also I told you already. For business people, what is the criteria? So if he's fulfilling the criteria, he has to maintain books of accounts. Otherwise not. Otherwise not required. Then coming to person carrying on agency business, he may not or he cannot apply for this particular section, presumptive taxation, 44A. Then a person or assessee who has claimed deduction under 10A, 10AA. 10B, 10BA, etc. in the assessment year. If you want, because you are export-oriented unit, under section 10A, you can claim exemption on a pro rata basis for your export turnover. If you want to claim that, then you cannot go on a presumptive tax rate. So if you want to claim benefit under any of these sections referred to here, 10A, 10AA, 10B, BA, etc., then you cannot opt for presumptive tax. You have to necessarily determine your income in the normal course, pay tax in the normal course. No presumptive tax will apply for you. And interestingly, once you opt for a presumptive tax, can you declare an income higher than your 8%? The answer is yes, in case you want to. I don't think anybody would like to do that. Would you like to declare an income other than or more than 8% and say 40 lakhs in your turnover? 8% is my business turnover is 40 lakhs, 8% is 3 lakh 20. Plus, 5 lakhs காட்டுறேன். 5 lakhs தான் profit actually. பண்ணுப்பா உனக்கு certificate வேணா வாங்கிக்கோ. Best citizen அப்படின்ட்டு. பட் அதுக்கு மேல ஒன்றும் கிடையாது, 5 லட்சம். Correct? So you can declare a higher income if you opt to. That's your choice, but you cannot declare a lower income. If you declare a lower income, automatically maintain books of accounts and get it audited. You are running a business, and if your turnover is 1 crore, would you opt for this presumptive tax? Generally speaking, on administrative reasons, not forget about tax planning and all. If you are running a business and you want to run it smoothly without any hassle, would you opt for this or not? Yes or no? Silence.
Yes, sir.
Expert
No,
and
sir.
being not very good in being silent. Silent, please. I'm generally asking a question, whether you would opt for it or you have any other views on this.
Yes, sir.
It sounds good. It sounds good because it removes you the hassle of maintaining books of accounts, maintaining records, blah blah. No tax audit, nothing. Just flat rate, 8% of your total turnover is your income, and pay your tax on it. Done. I think it's a wonderful section, particularly useful for small to medium players. And the limits are also prescribed accordingly. I think the department is to be appreciated for this section because it's really very section conducive to small players and medium players. Okay, moving on. As I already said, you cannot declare an income lower than this. If you're opting for presumptive tax, then you're automatically subject to tax audit and maintaining books of accounts. Okay. I don't think anybody would opt for it. In case you want to declare a lower income, you have to go for it. And make a note, an assessee has declared profits under this section. If an assessee declares profit under 44 AD, he cannot declare a lower profit for the 5 next consecutive subsequent assessment years. Very important condition. If an assessee is opting for this presumptive tax, he cannot declare a lower profit for the next 5 consecutive years. And if he is going to declare a lower profit, then he shall not be eligible for claiming benefit of this section. What does it mean automatically? If you're opting for this section, you have to continue to opt for this section for the next 5 years. You cannot declare an income lower than this in the subsequent years. So this year, my turnover is 1 crore. On that, 8% is 8 lakhs. Next year, my turnover is 1 crore, but my profit is only 4 lakhs. You cannot declare that. You still show 8% of 1 crore as your income. So I repeat, if an assessee opts for 44 AD, then he cannot declare a lower income. I'm talking about on the same turnover for next 5 consecutive years, subsequent years. So he cannot declare an income lower than what has been declared under presumptive tax for the next 5 consecutive years. Example, if an assessee has declared 8% of 1 crore this year, he cannot declare lower 1%. I mean, 8% of 1 crore is what? 8 lakhs. So let us say for this previous year, he has declared a turnover of 1 crore and 8% of that is 8 lakhs. Next year also turnover is 1 crore, but his actual income cannot be declared as 4 lakhs or 5 lakhs. He has to declare a minimum of 8 lakhs. Compulsory for the next 5 years. Otherwise, people will try to keep doing this and that every year. So they have sort of provided for next 5 years, you can't alter it. Now this is about 44 AD. That is determination of income on a presumptive taxation basis for those who are carrying on a business and whose turnover is within the limits prescribed. So the limit, don't forget, the limit prescribed is already discussed. Maximum limit should not cross 2 crores for an assessee. This also keeps changing year on year. So always remember the limits. Have a notebook with you or a diary or whatever. Make a note of these points very, very clearly. 44 AD, turnover limit 2 crores. Whatever bullet points. So quick reference up. Similarly, tax audit, threshold limit. What is the limit up to which tax audit is compulsory and what is it you have to do? What all the everything should be like in your hands. Like anytime you should be able to refer it. So take like a reference up. And I hope all of you are spending 1 hour a day on income tax. If you want to score good marks in income tax, 1 hour compulsory study of income tax every day. I'm sure you're all doing that. Coming to the next section, 44 ADA. This is again presumptive tax option for professionals. So what we discussed under 44 AD is for those who are carrying on a business. And 44 ADA, the assessee should be a resident individual or a resident firm other than LLP. The assessee should be engaged in specific profession like doctor, legal, architect, chartered accountant, cost accountant, company secretary, etc. So he should be a person engaged in any of the specific professions. Third, the gross turnover does not cross 50 lakhs. So small to medium practitioners. Turnover annually should not cross 50 lakhs. Then you can opt for this presumptive tax. And the income shall be declared at 50%, 50, of the turnover. And if an assessee wants to declare an income lower than this, you need to maintain books of accounts and also get it audited. A practicing professional, my turnover is 45 lakhs. So straight away 50% of that is my profit or income. Probably, I don't know, unless you calculate it, you will never know whether it is beneficial or not. So you need to do a planning here based on your turnover, because 50% looks a little high. So 8% on business turnover is okay, but this is 50% of your turnover. Why is that there is a big gap between a business turnover and the professional turnover? Because there you are talking of 8% of turnover as income. Here you are talking of 50% of your turnover as income. Why do you think there is a big gap?
Because the expenses will be high for the business.
You're right. Expectedly, the expenses for a business are at least normally much higher than a professional. Why is it so? A professional is offering a service. Profession has also got a lot of expenses like rent, electricity, staff salary. Even a small professional has to incur a monthly expenditure of something close to 1 lakh or 2 lakhs probably. So in a way, it's very cutting it too fine, but because he's got assets to use, depreciation. Now take for example a professional with a 40 lakh turnover, and he has got 40 lakh turnover in a year. You have to have 2 staff, 1 manager. Staff salary today nothing less than 15 to 20,000 per month. Just put a ballpark number, 15 to 20,000 per month for 1 staff. 40,000 per month for 2 staff. So annually 4,80,000 for staff salary. Rental 25,000, 3 lakhs, 4 lakh 80 plus 3 lakhs, 7 lakh 80. Asset depreciation 1 lakh, for example, or 2 lakhs, 10 lakhs otherway. Upon travel, electricity, whatever you may add. So if they add 10 to 12 lakhs, 30 lakhs, 40 lakhs. So 45 lakhs turnover to 20 lakhs. Probably that is the way it is. So that is how the determination of that 50% is coming. So they have some basis or rational, but if you are going to have a lot of expenses as a professional has got expenses in the form of taking third-party consultants. So not that it doesn't have an expenditure. It's okay. No, that is point beyond debate because that is fixed in the act. So what I'm talking about, that's a rationale probably. Business has got more expenses because it involves expenditure comparatively higher than because that is more of a business buying and selling, etc. But here is more of a service. That's the primary reason why there's a big gap. Okay, that's just for general understanding. So 50% of your turnover shall be your income. And as I said, if you want to declare income lower than this, you need to get your books of accounts audited. You have to maintain books of accounts and get it audited. Then 44 AE with respect to truck operators, presumptive tax. Very important. With respect to heavy goods vehicle, because whenever you talk about a truck operator, you are talking about a truck operator, important point, make a note, he should not own more than 10 trucks. If assessee is having more than 10 trucks, this section will not apply. So you cannot have more than 10 trucks. An assessee having up to 10 trucks can apply for this presumptive tax or can use the presumptive tax option. One is with respect to heavy goods vehicle, where heavy goods vehicle categorization, the profit and gain shall be 1,000 rupees per ton of gross vehicle weight per month or part of the month. Very important, make a note. For a truck operator having a heavy vehicle, a big truck, any guess on what would be the weight of a big truck? Any guess? I'm talking about weight, ton weight of a big truck, heavy goods vehicle. Truck, பெரிய truck என்ன weight இருக்கும் டன்ல?
32 feet.
For general ballpark number. Let us assume 10 tons. A heavy vehicle, heavy goods vehicle, 10 tons weight of the vehicle, not what you load in the vehicle, the vandi or the vehicle. So for each ton, 1,000 rupees per month or part of the month. Is the profit or income? So I am having 5 trucks. Each truck's weight is 10 tons. And I'm using it for the whole year. Can you tell me my income or profit? 5 trucks. Each truck is 10 ton. Let us assume I have 5 trucks. Each weight of each truck is 10 tons. And I'm using it for the whole year in my business of truck operating. What is my profit? This is the profit part. Can you calculate and tell me? Trucks. Each truck is weight is 10 tons. And I'm using it for 12 months in a year. For each month, my income is 1,000.
6 lakhs, sir.
6 lakhs. A simple arithmetic calculation. That's all. 6 lakhs is my profit for the year from my truck operating business. Now, the another point you make a note is, other than heavy goods vehicle, small vehicles. So the categorization is something which will be done by you can determine whether it's a heavy goods vehicle or not based on the truck load or size of the truck, etc. So that is something more of a practical thing. So nothing to worry about that you can identify that. So if you're going to categorize other than a heavy vehicle, 7,500 per month or part of the month for every vehicle. Even a large heavy truck can be 20 ton weight also. But anything other than a heavy goods vehicle, a small vehicle which you are using as a truck operator. A fixed income of 7,500 per month or part of the month for the number of months you operated the truck. So if you have 4 small trucks, I have operated for 1 year. What is my income? I have operated for the whole year. Trucks, small trucks, per month 7,500 is my profit or income. 4 trucks for 12 months.
3,60,000.
3x.
Correct. So that's my profit. That's my income. I have to pay tax on that. Without actually determining what is an actual income, maintain books of accounts, expenses, blah, 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 it's a fixed rate. So no need to maintain books of accounts, no need to get books of accounts audited. So the heavy goods vehicle, they have classified anything which crosses 12 tons. Anything, the truck weight is more than 12 tons. Any truck where the weight is more than 12 tons, it's a heavy goods vehicle. Anything less than 12 tons, it says that exceeds 12 tons. So exactly up to 12 tons, it is a small vehicle. Anything which is exceeding 12 tons, it's a heavy vehicle. Any doubts? So, as far as closing stock valuation is concerned, we all should thank God that there's no separate mechanism in income tax. It's all whatever you do for financial accounting, the same value of stock will be tax, income tax. You don't want to think about a separate procedure for determining value of stocks for separately for income tax purpose, then another additional job. Luckily, it is all the same. Whatever income tax valuation is the same as per your financial books. That's all. So no need to maintain any separate records for inventory for income tax purpose. All your financial records will hold good. Okay, Priya?
Yes, sir.
So I think we covered all the aspects of income tax regarding income from business or profession in entire detail. And with the help of these professions, we will be able to solve problems, which I will do in the next class. I will show you how to work out a problem on income from business or profession, how to compute income from business or profession. So we are going to do problems for determination of income from business. We are going to understand how to calculate income from profession. Procedure involved. So that's the plan, which I will do it in the next class. But my request to all of you is that, again, I'm repeating, every single aspect of income tax is based on provisions. These provisions you need to be really familiar in order to apply them and get your answers, because your exam question paper will contain computation problems for determination of income, etc. So unless you have the provisions followed, it will be really difficult for you to work out. So the first thing I would request all of you to do is go through the provisions in detail and ensure that go through the provisions in detail and ensure that you are able to remember them and recollect them and do it without wasting time in thinking what is the provision. Income tax paper, particularly I'm referring to CA in particular, because CA they give lengthy questions, and so you need to be really having the provisions in fingertips. In CS, CMA you have MCQs also. CA also have MCQs, limited MCQs. CS, almost the whole paper is MCQ only, taxation paper. But even again they ask lengthy questions. For one question itself it will take 2 minutes to read the question and then apply and get the answer. Even recent exam also I shared with you. In ACS executive, they ask quite a few lengthy questions, which comes with a lot of time. But nevertheless, paper will be such that it will average out. So some questions will need more time, some questions will need lesser time. So CMA also, though I don't have a question paper with me, but I can safely say that the questions are a combination of 1 mark, 2 mark, descriptive pattern, etc. So kindly ensure that you are thorough with the provisions and accordingly solve problems, practice more problems. We have already covered other heads of income. Hope you are doing problems at home, and by doing it continuous basis only, you'll be able to remember the provisions. Don't lose touch. Continue to read the provisions on a regular basis, and don't skip that, because otherwise it will be difficult to get back to it again and remember and all that. So continuously, if you study, it will be easier for you. Okay, so that's the whole plan. So next week I'll solve problems on this head income from business or profession. So kindly go through all the provisions and come for the class, so it will be easy for you to follow that. Okay, so today that's for the session and completing it today. Hope you all have understood the provisions, whatever we discussed. So if you have any doubts, feel free to reach me and I'll be happy to clarify your doubts. So tomorrow being Sunday, you may have a class in the evening on company accounts. I'll try to schedule a class so that, as already discussed, and so morning anyway you cannot have a class. If possible, I'll schedule a class in something like, as I said, 4 to 5:30 or 4:30 to 6. I know Sunday it's very difficult. Many of you will find it difficult to attend. So I'm also, that's the reason why I'm finding it difficult to fix up a schedule. Nevertheless, we have to do that. I don't think we have much of a choice there. So let us see. I'll try to communicate that part to you. On Monday, as usual, we'll have a class on company law. And the other classes as per schedule, we'll continue to have in the upcoming week. My request to all of you again is to write your test. And repeating, I've already circulated the test topics in our GCC Academy app. So kindly write your test, send us a test plan, and write the test regularly. I'm telling you, this is going to be of great help in the main exams. So I find that a lot of students who are to start the test and all that, you may be having everything in mind, but you have to put it in a paper and practice it. That will give you that confidence level for the main exam. So kindly cooperate and write your test. We are ready to help you by evaluating and properly giving you the answer sheets back in a short time. So we are doing everything possible to help you in this regard. So kindly make full use of the test series. Okay. So thank you for joining in today and attending the class and being participative. Much appreciated. So I'll catch up with you again in the next session. Take care and have a nice day. Thanks a lot.
Thank you, sir.
Thank you, sir.
Take care.
Thank you, sir.
Thank
Thank you,
Take
sir.
care.